Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A second bearish black crow yesterday and a follow-on lower from the previous session's bearish double. And just when I thought the market was confirming its recent move out of the previously highlighted mid-July to date bear channel, highlighted in bright red on my daily chart, and I actually laid out potential topside targets for such a pattern of a primary target X in a 107.10 area and a secondary target X1 in the 108.05 area. Just as I was doing this, the market turned lower and fell back towards the broken upper bear channel line, currently at 105.23. The reason why is fairly obvious. It was the declining short medium moving average, currently at 106.80. Not the most heavyweight of such resistances, but it was enough this time. I'd also drawn a new, small and potential bullish, bull channel, let's call it, currently 105.5 to 107.09. However, I have not highlighted it because it is new and I am not certain of its validity just yet. Looking further below, we have support from the combination of the February and March 2017 lows at 104.92 before a pretty clear area until the congestion between 103.40 to 103.69. Now, so far today, a continuation lower and a breach of the newer lower bull channel, though it has been a tentative breach so far. Cable, aka sterling against the US dollar. A second bearish black crow and a follow-on lower from the previous session's bearish army and bearish double combination. The market has moved down towards the lower end of its recent range, and it still continues to exhibit a wide-ranging indecision between the May 2020 low at 120.73 and the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. The main recent feature here had been the breakdown below and out of the March to August rising wedge pattern, which is highlighted on my daily chart in bright red. The targets for such a pattern were a primary target in the 124.10 zone and a much harder to reach secondary target X1 in the 116.05 zone. The primary target was achieved in mid-September, but the secondary target looks now very much out of reach as the market has decided to hesitate between the May 2020 low at 120.73 and the 50% Fibonacci line of the June 2021 to September 22 move at 123.16. I was minded to retire target X1 after my last commentary, but I have instead relented for now. I have, over the last few sessions, pondered upon whether the action since mid-August may not have some elements of a bearish halfway hesitation or a double bottom pattern about it all. Now, I'm still pondering on this matter. So far today, a small follow-on lower to test the May 2020 low at 120.73, but no more than that. Euro sterling. A combined bullish engulfing pattern and bullish opening white Mariposa. After 3 days of indecisive spinning tops. The market also punched up and closed over for the first time since May over the April 2021 high at 87.19. Interestingly, I suspect the market finally utilized, the slowly declining long moving average below, currently 86.93. That's highlighted in gold on my daily chart. And I used that as a base for the recent action higher. The recent idea I raised that the move since early September may be a bullish halfway hesitation on top of the recent roof pattern comes to the fore again, as we have a potential target X2 for this pattern in the 87.95 area. The overall bigger picture pattern still remains the June to September roof pattern, with potential targets for this pattern of a primary target X above at 87.42 and a primary target that in effect had been achieved actually last Friday, if it's move up. And then we have a harder to reach secondary target X1 up in the 88.18 area. Now, so far today, well, a small attempt higher, but then a pullback lower to where it opened and still above the April 2021 high, if only just at 87.19. US dollar against the Indian rupee. A combined bullish engulfing pattern and bullish opening white Mariposa yesterday, which I suppose in its own way was not that hard to achieve, as the previous session was an indecisive spinning top. It nevertheless did prompt a close back up over the slowly rising short medium moving average, currently 83.05, though interestingly the flat lining short moving average, currently 83.18, capped the market. We still have a breakout below the lower trend line of the previously highlighted, in dark blue on my daily chart, ramshackle late July to mid-October ascending wedge pattern. Ascending triangle pattern, my apologies. But it was not convincing performance, if that is to be the pattern ahead. I'd previously laid out potential targets below for such a pattern. Thus, a primary target X would be in the 82.45 zone, with a secondary harder to reach target X1 in the 81.45 zone. I nevertheless would still, once again, caution you on the possibility of false breaks here, in either direction, just in case. Looking below, we now have the short medium moving average and then the late September low at 83 even as supports. Meanwhile above, we have the extension of the downtrend, currently at 83.24, that makes up the upper trend line of the ascending triangle. And also then we have the October 22 high at 83.27. Plus the spiking highs of late September and October, just above 83.30. Now so far today, well, a continuation high to test the downtrend, but only for now. US dollar against the Brazilian real. An indecisive spinning top yesterday, which could, after a fashion, be seen as a bullish harami. All this was created by the market closing below, in the previous session, the highlighted in gold long moving average, currently at 499.66 for the first time this month. But still above the combination of the upper trend line extension, which is below that, which is highlighted in purple on my daily chart, the August to September rectangle pattern, currently at 497.98, then the rising short medium moving average, currently at 498.20, and the 50% Fibonacci line, the October 2019 to May 2020 move at 496.61. This was why we had the indecision as bearish pressures when they met a bullish stone wall. Looking overhead, we had the capping action once again of the combination of the Fibonacci's at 507.39 and 505.73, especially 505.73, as well as the short moving average, currently 507.15. Overall, in the bigger picture, the market continues to be moving within the breach, but ultimately still valid November 2022 to date bear channel, currently 470.70 to 516.5, and that's highlighted in bright red on my daily chart. The most recent incident involving this bear channel had been the upper bear channel capping the market in early October. US dollar against the Mexican peso. A second bullish white soldier yesterday and a follow-on higher to the previous session's bullish engulfing pattern. The market closed for a second consecutive time over the neckline of the January to May head and shoulders top, currently at 18.2274, the one highlighted in purple on my daily chart. And at the same time, it was yesterday supported by the same neckline. Further below, we have the lower bull channel line, currently at 18.1824. Of the September to date bull channel, currently 18.1824 to 18.9916, and that's highlighted in dark green on my daily chart, as well as the neckline currently at 18.0937 of the July to September lopsided reverse head and shoulders pattern. This one is highlighted in bright red on my daily chart. I had begun to pay close attention to this bull channel, though I am mindful that we have targets further up and the October action is beginning to show elements of a possible double top or even a small ascending triangle type pattern. Overall, one could say the market continues to consolidate its moves up and away from the long moving average below, currently at 1771.53, and possibly once again the significant bright red neckline of the July to September lopsided reverse head and shoulders bottom. Earlier prices had managed to achieve some notable targets on the top side, earlier days I should say. The primary target for the March to July descending wedge pattern, the pattern highlighted in bright green on my daily chart, as well as the primary target for the break higher out of the long-term September 22 to October 2023 bear channel. The pattern highlighted in dark blue on my daily chart. However, the harder to reach target X2 for the descending wedge pattern, and also coincidentally the harder to reach secondary target for the bear channel, both at the 189400 area, well, those are still open higher up. I also have not as yet placed any primary or secondary topside targets for the reverse head and shoulders bottom as yet, mainly because we are still a little too close to the neckline for my liking, and also because I'd like to start to see target X2 either reached or rejected. So far today, a further try higher, but having resistance at the top of yesterday's range in the 1840 area, and still within yesterday's upper range for the market as well.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final important bit.